This is a chart of AVGO Broadcom. It's actually in the max list. It's a franchise stock. It's a market leader. But there's something we have to always be aware of. Just because a stock is a max list stock or it's a market leader, don't think that it's not able to be taken down hard in price. It's not immune to that. And something else we must always be aware of is earnings. You've got to know those earnings dates. And sometimes there's telltale clues in charts. But there's a very important rule, and I'd like to share it with you. There's a lot of rules, but this is a really important one. Try to avoid stocks that are wide and loose. You can say, what do you mean by wide and loose? Gaps up, drops big. Gaps down, falls, closes up. Gaps up, closes down. This wide and loose action goes up, closes strong. The next day gaps up, runs up, reverses down on a pickup in volume. The next day gaps down and reverses and almost closes up. The next day it gaps up and drops and closes near its lows. That will chew you up. Stay away from these zigzags. I can't stress it. Look for clean and simple in a chart pattern. You'll increase your odds. Now right here is important. The stock gaps up and closes down. But there's something very important that was happening in this realm right here. What was it? AVCO was releasing earnings. Please remember these things. Limit losses. Focus on clean and simple chart patterns, not loose, wild chart patterns. Also, know the earnings dates. I feel sorry for the individuals that bought the stock right up here at around 258, 259, and now here it is at 245. That is a haircut. That hurts. What is this? Loose pattern combined with earnings. The moral is this. Stay away from that and be aware of those earnings dates.